Look, I get it. Your portfolio looks like a crime scene right now. Just 4 months ago, in October, we were all geniuses. Bitcoin was at $124,000. The AI hype was untouchable, and risk on was the only language we spoke. But today, it's February 2026, and the vibe has officially shifted. Amazon's Capex report just spooked the tech sector. The Fed is tightening the screws, and suddenly, everyone is looking for the exit at the same time. But while the headlines are screaming panic, there's one guy sitting in Omaha who's probably having the best week of his year. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." In late 2025, the world was greedy. Today, they are terrified. In this video, we are going to stop the bleeding, look at the actual data behind this sell-off, and show you exactly how to flip the script so you aren't the one paying the panic tax to the investors who kept their cool. Let's dive in. Fast forward to today, February 2026. The Warsh Factor is hitting the Fed. Amazon just dropped a $200 billion capex bomb that scared the tech world, and Bitcoin is fighting for its life at $60,000. Most people are terrified. But if you follow Warren Buffett's golden rule, this isn't a tragedy, it's a shopping spree. Think back 4 months ago. The greed was everywhere. Investors were ignoring the massive spending by Microsoft and Meta because the AI hype was too loud. People were buying the top of the Bitcoin cycle because they were afraid of missing the hyper-Bitcoinization. That was the time to be cautious. When your neighbor is telling you about their 3x gains in 6 weeks, that's the signal to look for the exit. Now, the flip side, be greedy when others are fearful. Look at the headlines this week. We are seeing historic crash velocity. The market is punishing anything that breathes AI because they're tired of waiting for the ROI. This is peak fear. We have the AI software sell-off. People are panicking that new models are making current software obsolete. The Fed pivot. The nomination of Kevin Warsh has people convinced the cheap money era is dead forever. Forced liquidations. $6 billion in crypto wiped out in days. This isn't a slow decline. It's a synchronized unwinding of every crowded trade from the last 2 years. So, how do you implement Buffett's logic here? You don't buy the trash that's failing. You buy the quality that's on sale. While the masses are dumping tech, look at what's holding up. The rotation into consumer staples and utilities, boring stuff like Coca-Cola, is already happening. The fear is concentrated in AI and crypto. Buffett wouldn't tell you to catch a falling knife, but he would tell you to look at the companies with actual cash flow that are being dragged down by the general panic. If the fundamentals of the economy are still at 3% growth, but the stocks are down 30% because of sentiment, that's your gap. That's where the greed belongs. The market is a machine that transfers money from the impatient to the patient. Right now, the impatient are paying a panic tax. Don't be the one paying it. Stay grounded, look at the data, and remember, the best time to buy the future is when everyone else is convinced it's over. The truth is, the stock market is the only store in the world where customers run out the building when there's a massive sale. Right now, the Warsh Factor and the AI hangover have created a massive disconnect between price and value. Most people will wait until things are safe again to buy back in, but by then, the discount is gone. If you've got a long-term horizon, this February sell-off isn't a disaster, it's an invitation. Don't let the noise of the 24-hour news cycle shake you out of high-quality positions. Stay grounded, stay patient, and remember, the market is a machine that transfers money from the impatient to the patient. Which side of that machine are you going to be on? Drop a comment below and let me know. Are you buying this dip, or are you sitting on the sidelines until the dust settles?